But first, our top story sees a global logistics firm get downgraded on their debt rating by the S&P. Our editor-at-large, John Kingston, is here to tell us all about it. John, thanks for joining us this morning.
Yeah, I just want to jump right in. There's really nothing in the report that suggests that they're getting closer to a default.
Okay.
Yes, they're down a grade, no doubt about it. The category, the whole sort of B category is rated highly speculative. Obviously, that means that there's always a greater chance of default than something like that, or a double A or something like that. But they did not suggest in there that the company is close to default. Okay. But having said that, I mean, it's a significant move. It's almost really not shocking. I mean, we know how bad things are in the 3PL industry. C.H. Robinson just coincidentally yesterday hit a new 52-week low. They've been doing that a lot over the past several months. They're down, 17, 18% in their stock just in the last 3 months. But first of all, it was nice to get a inside look at Echo Global Logistics finances to some degree. They used to be a publicly traded company, and then they got bought by the Jordan Company. And as a journalist, I hate when that happens because we like to have those public numbers on how they're doing. So, the ratings report does not give specifics on like their revenue, their profits, whatever, but it did say that their revenue decline is, I'm going to have to put my glasses on, shocking everybody because I never wear them on the air, they had thought that they were going to get revenue declines this year of like 14 to 16%, but actually it's a lot higher than that. Okay, wait a second. No, the expectation was flat revenue growth, and now the expectation is revenue declines of 14 to 16% in this year, and then revenue growth of 3 to 5% next year. They did put out a statement. Remember, one thing that S&P and Moody's mostly focuses on to the large degree is free cash flow, because it is free cash flow that helps to make sure that the interest payments are made on the debt. S&P said that the company was going to be sort of flat to negative free cash flow this year. They put out a statement that said they are free cash flow positive this year, or in the last 12 months, they said, in the last 12 months. They did not say just for calendar 2023. So you can see cash flow-wise, there may be around break even, either side of that right now, maybe a little less, maybe a little more. But, this is not a shocker. I will say this, that at B-, that's not a great grade. It's about 6 notches below investment grade. I don't know C.H. Robinson's debt rating off the top of my head, but it is investment grade. So, Echo really here is being seen as like at least 6 to 7 notch worse credit rating than C.H. Robinson. And I will tell you that I know that C.H. Robinson is desperate to hang on to their credit rating because it costs them money if it drops. And if that comes out, that's going to be very bad news for them.
Absolutely. So, John, take us through the debt ratings as they are in terms of what does this downgrade essentially mean for Echo? Does it change things all that much, or is this possibly something just a little bit more serious to be concerned about?
Well, I mean, what it means is that any kind of floating debt, any kind of floating interest rate that they have will almost certainly go up. If they go back to the capital markets, they'll have to pay a higher interest rate. Obviously, we're going to have to pay a higher interest rate anyway than they may have 2 years ago, just because we've moved into a whole different interest rate environment. But they would have to pay more. They would end up paying more as a B- credit than they would as a B credit. So this is not like an equity analyst coming out and saying buy the stock. That will have that might have zero impact on a company. A debt rating is extremely important to anybody who's involved in the public markets, and they do not like to go down. I can tell you that much.
And John, when we're looking at things a few months ago, a couple of quarters ago, there were a lot of executives on earnings call that saw the second half of the year looking a little bit more positive. As we fast forward to where we are now, what's the sentiment around most of the quarterly calls that you've been seeing, and what are the expectations going into 2024?
Well, I think the statements that you hear on the calls are mostly one of sort of shock and resignation. They thought that they'd get a better second half, and they didn't. Craig Fuller and Zach Strickland talked about this yesterday on the State of Freight webinar. What they couldn't believe was that Heartland, which has always been considered, and probably still is, a very well-run, efficient company, lost money. Not just sort of, lost money in one way of losing it, net income loss. which is really pretty staggering. And an OR well over 100. I know I've written the Heartland Express earnings story a few times in my career. I mean, their OR was well into the 80s, not all that long ago, and I expect that it will improve. But yeah, so there's just it's been tough out there. C.H. Robinson, as I said, the earnings come out tomorrow. They'll have an earnings call that afternoon, and it's going to be a very interesting one because we know how bad things are in truckload. There's not that much public information on 3PLs, but you have a series of 52-week lows on the C.H. Robinson stock. You have the Convoy implosion, and you have an independent debt rating agency taking a whack at Echo Global Logistics. So all that really kind of points to how bad things are, how tough things are in the 3PL sector.
John, we've got Clarissa House coming on to just a little bit to talk about some of the closings and unfortunate bankruptcies that we've been seeing so far this year. Is this the first time we've seen a logistics company or a freight company take a downgrade as far as the debt rating is concerned this year? And are we concerned that more are on the way, or that some have happened that we just haven't been privy to?
There's publicly traded debt is not a big thing in the transportation sector. I mean, I follow the Moody's and S&P announcements and their list of ratings actions religiously because I particularly like it. Like from FreightWaves perspective, I particularly like now when they do a rating on a privately held company because it gives you a look into some of their finances. Again, not everything. You don't know about their net income or anything like that. I'm trying to, you're catching me at the top of my head, Bill. I think I've probably written more downgrades than upgrades. I did
a little bit of research. I did a little bit of research and just saw that they did. The S&P did downgrade several banks about a month and a half ago, but I didn't see anything in the transportation companies.
Look, the main thing they did, on C.H. Robinson, they did move their outlook to negative. So you either have a stable outlook, a negative outlook, or a positive outlook. So really, the outlook is a suggestion of whether the next move is likely to be up, down, or no move at all. Echo did keep a stable outlook, so there's not another move in the offing barring some major change. C.H. Robinson is sitting out there with a negative outlook right now from, I'm trying to remember now, it was Moody's or S&P, I can't remember, and which means that the next move, if there is one, is likely to be down. So, the next move on C.H. Robinson is either likely to be down or going from negative to stable. So I'm quite sure that they view the negative rating right now on their debt as something really to be concerned about. And so I think that really right now is the one you got to watch. There aren't a lot of sort of, basic truckload carriers that have public debt. I mean, XPO, I think, recently got upgraded. RXO has publicly traded debt that they kind of inherited from the XPO spinoff. Yellow, of course, had publicly traded debt. But, kind of like, the big truckload carriers just don't have it.
And John, of course, our go-to expert for all things energy. Thanks so much for joining us this morning, and then looking forward to your next episode of Drilling Deep.
Thank you. Yeah, I'm interviewing somebody that I met last week at the cybersecurity, somebody who works for the NMFTA to talk about cybersecurity. It was a great meeting.
It'll be a good episode there as well. John, thanks so much for joining us.
Thank you.